yeah, CLSA has come out with a fresh note talking about how the global equity strategy is shaping up, and they've spoken to a whole host of clients, almost 70 client meetings in 11 cities, and these are the key takeaways and the answers to the key question that the global experts are talking about at this point of time. The first question that people want answered is what is happening with respect to the US rate cycle. Now, as per CLSA, and the consensus view seems to be that the Fed pause is likely to be the base case going forward, and this will allow the other emerging markets, including India, to probably make a case for rate easing as well. Separately, the other big question which is being asked for is the fact whether China opening up theme has clearly played out or not, and there it seems there is a lot of disappointment among investors because this trade hasn't been very consistent in nature, and there has been a lot of disappointment and frustration with respect to how China's YTD performance has been. The third question people are asking is it time now to perhaps look at the tech stocks, what's happening with US equities, etc. And to answer for that is CLSA believes it's best to probably have patience at this point of time, because history tells them that it's better to wait till US heads into recession and then start making bets when it comes to the tech space as well as the export facing verticals, and put money into US equities as well. And lastly and most importantly, the question around why CLSA still has an underweight on India. And it's very interesting. CLSA says that a lot of their clients have been questioning them why India is still an underweight and why they are not increasing their stance there. So that tells you that there's a lot of interest around India, but they believe that Indonesia is the best place as economy at this point of time. That's why they prefer Indonesia versus India. They are waiting for some more factors to work favorably for India before they turn overweight. That's about getting clarity when RBI is likely to start easing, the capitulation that we have seen from domestic retail investors, when that's going to get away, and also the fact that India remains 10% overbought versus their internal models, etc., is something that is keeping them a bit tentative. But the mere fact that there is a lot of chatter and interest around India is something which is quite positive.